Welcome to Good Mortgage America, mortgage news strategy. We're going to do some real talk and rate wisdom. I'm Tim Rhey with True Rate Mortgage Group, and I'm here with Diamond Dave Bliesmer, Magic Mike Wilcox. Say hello, fellas.
Good morning. Hello to everyone.
So we're talking about something today that is it is near and dear to my heart and also to you guys as well. We're talking about broker versus retail. Now, as a non-loan person, as a non-loan officer, you may not even know what that is. I think we're going to talk about that today. We're going to explain the difference. We're going to talk about how it impacts some rate options, and I think this is going to be a really interesting conversation we're going to have today.
Yeah, so it's interesting, Tim, because it's I think consumers always have a perception and confusion between the difference, right? Because I know I usually have these conversations in the vast majority of transactions, and I think the question always comes from a consumer, like, why don't I just go straight to my bank? Why don't I go straight to my credit union? I've got everything there. I want to keep my mortgage account there, so on and so forth. It's a valid point. There's nothing wrong with doing that, right? From a service perspective, if you want everything under one roof, yeah, it's fantastic from a consumer point of view. The flip side, right, is in the broker world, we can obviously, manage and maneuver lock options a little bit differently where, we can trim overhead on the origination expense of the loan, do everything a little bit more efficiently, basically make the same compensation that, the originator within the retail branch is going to make on the wholesale channel and then pass that savings back to the consumer. So again, like anything, it's all consumer perception. It's all whatever the consumer thinks is best. But I think, fundamentally, it helps when consumers understand that, right? It's like the vast majority of time in the wholesale channel, you can make them get better savings on the transaction.
Exactly. Let's start here. Mike, you worked retail for a long time. Let's take people through a general understanding. In terms of lending, take me back to square one. What is the difference between a broker and a retail lender? As a consumer, what is the simple difference?
Yeah. So when everyone is trained out there to ask, what's the rate, right? That's what everyone gets coached to ask, from Uncle Bob to their realtor to whoever. They're coached to ask, what's my rate? So we got to let, what the heck does that even mean? And so everyone, for the most part, rates are rates. Everyone has pretty much the same pricing, but where does all that pricing go to? And that's where you really see the difference between retail and wholesale. And so when someone asks, what's your rate? I hate when they do that, because there's so much more that goes into, hey, it's not like, hey, here's your rate, because rate is made up of your loan product, your credit score, your loan to value, your blah, blah, all these different things make up your rate. And so when you're trying to compare apples to apples, it's really hard to do when people are out there online, on the radio, whatever, saying, here are our rates, because it's for a very specific little thing right there. And you're over here on the spectrum, and they're all over the board. But when you get everyone's information and we get very specific based on your personal information, everything you're looking to do, here's your rate now. Okay, what's that rate made up of? And so if you're on the retail side, they have to price to a certain number, because that number then has to go pay managers, staff members, blah, 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 everybody in the company. Whereas if you're on the broker side, the wholesale side, like we are, that number just goes to us and the borrower. That's it.
Okay,
And so we have so much more flexibility of, what do we do with these numbers? What do we do with this? And so that's why typically we can save them in cost, save them in rate, a combination of the two, because we don't have to pay for all these non-producing folks anymore. We can just apply to them and get them a better deal on average than most retail folks.
So using a broker is, and I'll let you cut it in a second, Dave. Using a broker is like buying my groceries directly from the farmer versus getting my groceries from the actual store, where it's passed through the chain, the travel chain, the markup, the manager, the operations, the building. All those costs get added in. Finally, when I buy the corn, I'm paying X, versus if I would go straight to the farmer and get it organic for less. Is that kind of how this works?
It's 100% how it works. And it's like, or, another analogy is, I want to go buy a new car, Am I going to go drive to every dealership in town to try work deals, or am I going to talk to an auto broker who does all that stuff for me and still gets me the best deal because I don't have to pay all these other markup
But
things?
isn't it?
Same thing.
But isn't it true, Dave? Did you want to add in that?
Well, I think you made a good point, Tim. Like, right, we kind of jumped right into this, but where you asked, fundamentally, if we were going to break this down in the simplest fashion for a consumer, what's the difference between retail and a broker? Fundamentally, from a consumer perspective, here's what that looks like, right? As if, say, you walk in to a nationally chartered bank and you walk into their office and say, hey, what can I get for a mortgage rate and fees? They're going to quote you exactly what they're going to offer you in terms of mortgage rates and fees. They're not going to quote you what all of the other banks, credit unions, banking services, they're not going to quote you what everybody else is offering in comparison to their offering. That's the retail model, right? Is you're just getting what
So
they're going to give you.
your
You're not getting
broker, you
where in the broker world, we're pulling all of those comparisons
got
in
it.
and filtering that out. So you can know, like, hey, out of these 100 investors, right, here's all of the best rate and fee combinations. If you don't care where the loan's serviced, let's focus on the best financial combination for you. As a consumer, that's broker, right? That's wholesale versus going into one bank and getting one bank's rate and fee combinations, and that's it. So to Mike's point, if you compare that to buying a car, then you consumer, you're going to have to go to those 100 different banks and credit unions yourself and call all of them individually to get those comparisons where you could just have somebody, filter that information for you right out of the gate at the initial application and then whittle down like, hey, here's your best kind of rate and fee combinations.
So your broker works for you. Your retail guy works for somebody else.
Yeah.
I mean, isn't that kind of what's going on here? Because I worked retail. Mike, you have a long history of retail. We know how this works. When you
Yep.
are a retail lender, you have obligations, you have minimums, you have requirements. You don't have flexibility because guess what? There are people on your coattails you have to take care of. They're called bills, they're called other employees, they're called managers, they're called the office you're sitting in. So when you work with a broker, you don't have that. That broker doesn't get paid if he doesn't get your business. He's going to try everything possible. We can shift this though, if you guys are cool with it. I have to ask. When I worked retail back in the day, it was frowned upon. The broker world was frowned upon, and I still think some of this exists today falsely. I think, what a broker is today versus what a broker was, 10 years ago. I think is a little bit different. I think the game has truly changed. But can you guys address for me why the word broker is such a misunderstood word in the real estate world, especially with a lot of realtors who've had bad experience with brokers?
Yeah, I mean, it's like anything. There are good and bad people in every profession. And I think that's a big chunk of it is one of the more difficult things if you are in the wholesale broker world is we're not looking at just one set of guidelines and one set of rules and one set of numbers for this borrower, and that's all we got. We have 100 companies we can place loans with, so it is so much more difficult to work through all of that stuff and figure out what's the best place for this person to go to. But it's also an extremely good positive thing for the borrower because what if they have some unique things in their in their situation and that bank they go to, well, here are the rules, here are the rules. Whereas we can now say, well, we want to focus on an investor, a lender that is a little bit more lenient with self-employed folks, for example, or whatever the case is. We might be able to fit them into a lot more customized program versus just here's the rules, take it or leave it, just done kind of a thing. So we can be a lot more specific, but that takes a lot to be able to figure all that stuff out. And if you are not someone that is good at doing that, used to doing that, knows how to do that stuff, man, it's easier to screw up. And so I think historically, there's a lot of people that said, oh my gosh, I see brokers are making more money on deals. I just want to go be a broker. But they're used to being in the retail model where they have everybody telling them how to do, what to do, all that kind of stuff, versus now you got to do it all on your own. And if they're not good at doing that, there's a lot larger likelihood of them screwing up. And that can give a bad name to brokers out there saying, oh man, I shopped all around and everything blew up because I didn't really know what I was doing. I think historically that happened a ton and it still happens. And so that's why it's critical you work with folks that know how to do those types of things because if you do, aces. If you don't, well, it could be a crapshoot with some stuff. And so I think that's a big part of it is just some bad stereotypes of people that know what they're doing, but that's normal for every profession.
And Dave, how has it changed in terms of Because back in the day when you brokered a loan, you kind of do turn around and hand it off and turn to God and pray that you get a good underwriter over there. You don't really have control. That was the big word. That's when I worked retail. I was like, don't do broker because you lose control. And I'm such a good LO that you want me behind the wheel. That's changed, right? Because now with the likes of masterminds like Matt Ishbia and some of these other guys, they figured out, hey, why does it have to be that way? Let's make broker all that was good about retail. Let's make it broker. But let's keep those margins and those savings so we can give people awesome rates and save money. Dave?
Yeah, I agree with the points that both of you guys are making. I think, the broker world has really evolved substantially over the last 10 years. And, it's interesting, like from my perspective, again, just like all of us, the vast majority of us always start out in the retail world. So we kind of understand what that dynamic and function looks like compared to the broker wholesale environment. I would argue this, in my opinion, when people are talking about control, and it's actually funny. I recently was engaged in a transaction, and on the real estate side of the transaction, that was their first question for me, right? Is how much engagement and control do you have over this as a broker? My response to that is honestly, probably more than you would in the retail channel, right? Because here's what I think people have to understand, right? Is in our world, it's all about knowledge and execution, right? You've got to have a very high level of knowledge, but you also have to have a very high level of execution in that transaction. And what I mean by that is, systematically, like in a wholesale, or excuse me, a retail environment, usually what happens fundamentally, if you're looking at just how that loan is manufactured through the transaction, you've got an LO typically taking the application. Now you've got a processor and assistant that are basically gathering all the documents and doing that at the instruction of the underwriter. The underwriter probably has overlays, so they want to see things that are different perhaps than, typical agency guidelines. And I think that's what, people from the outside looking in to us have to understand is, when you're underwriting files, yes, we do have a very wide scope of what we can do. We can go outside agency guidelines. We can look at, jumbo, non-qualified mortgage products, et cetera. But if you're really looking at those agency loans, like if you're really looking at, FHA, VA, USDA, Fannie Mae, Freddie Mac, right? They're all under the same guidelines. And all of us have access to the guidelines, right? So it's no secret on this is how you need to structure the file. But what I find in our world is with that execution, engagement, and knowledge up front at the time of application, you can really gather all the documents and structure that file exactly how you want the underwriter to look
I got to
at it.
jump in here, Dave, because you said something that is I have to get, I will forget this if I don't say it. What you just described, what we're not saying, that the elephant in the room here is in order to be a good broker, you probably have to have a little more experience than a newbie because you don't have the hand holding. When you're just getting into lending, it's probably a good idea to maybe work with a big company that's going to hold your hand, give you crappy rates, but teach you a couple of the basics. But if you want to go full-fledged broker and do exactly what you just described, which it sounded to me like you were underwriting a file, Dave, which is what you're kind of known for, and underwriting up front, both you guys. So that's a whole nother conversation is like, this just begs the question, who chooses to be a broker and who chooses not to be a broker? I think people who are afraid to become brokers or to stand on their own feet, even though they're going to get better margins and give their clients better rates and fees. I think the reason they don't do it is because there's a fear that you're going to have to figure things out on your own. And a person in the industry for 25, 30 years like you guys, and I'm 16 years, you guys are 30, whatever. It's a no-brainer. What are your thoughts on that? Do you see that parallel? Do you ever see a really top-notch strategist? I don't even want to call him a loan officer. I'm going to say a strategist, which not a salesperson, a strategist. There's a difference there. You ever see one that works at a retail? You're like, what are you doing? You're so good. Why are you still here? Mike, you're laughing. You agree?
Every day, man. We know so many that would be so much more successful in the wholesale channel than the
What's
retail.
keeping them?
But it's hard for them to cut the ties because they're comfortable, man. I got this nice cozy pillow and I sleep good every night, making decent money, and it's good. I don't want to rock the boat.
And am I
Go
going to be
out,
able
and
to
that's
ask?
totally good. totally fine. But, if they truly wanted to really help folks and change some people's lives, man, you can do so much more over here. It's amazing. And like, I was in retail forever, like you're saying clearly. And to your point earlier, I started at Wells. I even got the Wells haircut, right? It's what it'll do to you. But if you were new and young, you got to get the basic training. And so I think most people have to start there. I think about everyone starts that way. They have to. But then it's, man, when do you cut ties and go? And I think all of us would agree. I think everyone says it, man, I wish I'd have done it earlier.
Dave, you have a
I
lot
wish
of
I'd have left sooner.
Dave, you have experience leading a lot of LOs in that retail environment. What keeps people over there? I mean, clearly you don't have as many product options. That's agreed across the board. If you're a retail guy, they don't have as many options. The rates are typically not even close. What keeps a guy in that environment?
I think, personally, it's probably a few things. I totally agree with Mike's point. I think some of it is, I don't want to say laziness, but probably being complacent, right? So if you're in a retail environment, you always have somebody else to blame. You always have somebody else to kind of point the finger to. If a deal doesn't work out, you can say, "Oh gosh, I'm so sorry. It was our underwriting people that, didn't agree with our perspective on this." Or, hey, our capital markets people, I just can't get that rate lock to work out where we need it to qualify the transaction. Like there's always a safety net of everybody else that you can kind of point the finger to. And I agree with Mike. I think that helps people sleep better at night in the profession sometimes, but I also think it really complicates the transaction. And I think when you get to a certain point in your career and you realize, okay, well, what happens when all of these people around me that I'm kind of pointing the finger to, what if I think they're wrong? Right? In a retail environment, it's very difficult, if not impossible, to go up the chain from an origination point of view and say, listen, I think you're wrong on this guideline. I don't think this is true. I think we need to, inquire directly with Fannie Mae, HUD, et cetera. We really need to iron this out. I don't think you're looking at this guideline the correct way. That's almost an impossible thing
Yeah,
to
because
do.
the pushback ceiling is right here in retail. This is where the pushback ceiling is. You got to get past your manager, and then you got to get past your branch manager, then you got to get past the area manager, and then maybe if that's cool, they're going to let you go try to contest it. Whereas where we are at True Rate, we go right to the horse's mouth and say, "You're wrong." And Dave, how many times? And I say this, I don't say this to brag, but how many times do we have a conversation and you say, let's talk to the underwriter, and it comes back, we're sorry, Dave, it was, you were right. Or Mike, we've had this conversation where we go right to the underwriter and they say, I'm sorry, I made a mistake. That would probably never happen in a low ceiling retail environment.
It's definitely more difficult for sure. And so you can expedite things a lot more here and just go straight to it. And the other cool thing is because again, every place has overlays. Some do. I mean, some people have overlays over the guidelines and things like that, but if you're at a retail shop, they just are what they are. You're stuck with them. But here, like to our points earlier, if we're looking at a shop that has overlays and they don't fit our deal, well, let's just go to a different place that doesn't have them.
Yeah,
We have so many more options to work around that stuff where you just don't have that on the other side.
how many times are we guys locked on an interest rate? And especially in this environment where rates change every 2.5 hours, let's be honest, and maybe the rates don't change, but the market really is volatile. Pendulum shifts, treasury, 10-year. We're locked with a client, and all of a sudden, all hell breaks loose. The market shifts. The consumer gets hit up by another guy who says, "Hey, I can't believe you're at that rate. I can help." Look, and sure enough, the market changes. What can we do there, Dave? What will we normally do with that rate lock, or what are our options?
Yeah, in our world, there's so many things you can do, right? Depending on the lead time to a close date, you could obviously, adjust the file, replace it, relock it, et cetera, kind of start fresh,
So hold on. So you just
investor.
defeated the word "my rate is locked," because how many times do consumers say, "Damn, we locked early. The rates got better"? But you're
No,
telling me that when the rate is locked, you still have options to relock it somewhere else?
you do. And on top of that, so from a consumer perspective, here's what you kind of have to understand, right? As a consumer, once you're locked, you can still renegotiate that rate lock, right? So here's where I think it's interesting. And we see this a lot too in the retail environment, right? Where they tell the consumer, hey, maybe we shouldn't lock yet. Maybe we should wait for things to improve, so on and so forth. Where, my perspective is, well, why don't you lock today? Because if you're okay with where these numbers are and you're locked, right, it's not going to get worse. if things get better, there's ways to renegotiate this rate lock, which basically your point, Tim, where you're going is, you can adjust the margin on the backside, you can adjust the fee structure, you can renegotiate it with the investor that you're locked with. If there's a lot of lead time, you haven't submitted the file, you could obviously relock elsewhere, redisclose it in that fashion. Like there's so much flexibility in that rate lock world.
Is that your style, Mike? Are you kind of a, hey, let's just lock it and guarantee that rate, but if it changes, we'll give you the better rate? Or are you kind of more in the camp of saying, hey, look, I know there's PCE report comes out tomorrow, guaranteed to be good. I'm going to lock you right after that report or before the market shifts. Are you more on the
Yeah.
gambling side, or do you take that approach?
It's not up to me, man. My approach is I want to educate the borrower, and here's how this stuff works. And I always ask them, are you super conservative with this type of thing, or are you a gambler? Because after you educate them on here's kind of how rates work on when you should lock and not lock, I'd leave it up to them. I'm like, well, what does your gut say? Do you think things are going to get better based on these reports? Or man, you're going to lose sleep, stress over this stuff, then let's lock it, because we have options. You're not locked forever to all eternity. We can work around things and move things around and change things. And so I'm educating them and letting them tell me which way they want to go. It's not up to me.
What about let's switch gears over to products. Let's talk about the reality of the products. We kind of hit on it earlier, but when your loan is, remember, we're talking retail versus broker. When you're with a retail company, they're limited with their product count. We all know that. Some retail companies have a little bit more, a little less, but ultimately the product count is capped. That's how they operate. You can't be a jack of all loans when you're a retail guy. That is really the hang up. When we say brokers have options, better options, that's not just a little cute saying. Like, we literally have, the last I counted, guys, I think we were at 140. Man, I think we tapered it down a little bit, but at one point we had 147 lending options, which are 147 phone numbers, emails, people that we can call, give a scenario, and get an answer. And that you will not find that anywhere in any retail world. The modern day age of the broker, which is what we are at True Rate, we really are the modern day version of the broker shop. Best of retail, best of banking, best of broker. It's what we've created. It's what we have. When you turn around and send that email out to 147 people, those people want our business. They are hungry. They want to say yes more than no. What are your thoughts on that, guys? Like, let's talk about that a little bit. Let's compare how a typical loan works with you guys. Give me an example maybe of a loan you've closed recently that was, man, I mean, it could be a nasty one that nobody could do. Can you guys, I got one in mind, but I've been chatting. I want to hear your stories. You got any products out there that were crazy that you reached into the investor pool and got lucky on?
Yeah, we do that stuff all the time. It's, and you'll like real
Give
quick,
me
you'll
one
hear a bunch
example of a nasty one.
well, like you'll hear the retail shops a lot saying, "Oh, we have a variety of products too," and they're getting better at providing more products, and they can even
Yeah, they can
broker,
broker.
so they can kind of do both. You'll hear that all the time, but the big difference is when they broker a loan, their pricing's frozen. Their pricing's frozen at this high comp. We can go so much lower. So yeah, you can broker, but I can still smoke you in numbers and
That's
price and
true.
service and
And
everything.
also,
That's a huge thing to get all that stuff.
yeah,
But like there's so many different examples of goofy products. Like I've done a whole ton of non-warrantable condo stuff, and what that means. It's a condo complex that's not approved by Fannie Mae, or they have some things that most folks can't lend on them. And then as long as we can prove a few health and safety items, a few other things, we're knocking those out with normal down payments, and we're getting them done fast. Where most people can't touch them because they have these overlays that they don't have the warm and fuzzy on, and they just won't touch them. And we'll go straight to the guides and get through them, and we get them closed. So we see that stuff all the
and our
time.
realtor partners know that that's who we are. Back to your point about when when a retail person says we can broker, the problem is that when you are a retail guy, you're so used to that tight system, that limited tight system, and you could be great at it. Most of those guys are really good at their limited system. So they're good at driving on the freeway. But when you broker a loan, you're going off road. And the
Yeah.
problem there is you don't have the freaking thing set up. The suspension's off. It gets clunky. You don't know how to communicate. We stay off road. God, I love that metaphor. I just thought of that. It's freaking genius.
Sometimes you just got to flip the hubs,
You know
Timmy.
what? And it just,
You know?
if you don't know how to, trust me, when I was retail and I had a broker, I was shaking because I'm like, I don't know how to drive this off road. All we do is off road. So the minute we're not off road, it's like autopilot. Dave, I
Yeah.
need a loan because I know you are the master of nasty files and trickery. You got one in mind?
You know, I'm just going to go very broad here because, and I think this is a very poignant topic, especially in this market with, first time buyers. I think we've all noticed this, but, yes, it's tough financially in this market with rates and housing prices where they are. On the flip side, we're also seeing first time buyers making a very healthy amount of income. So much income where, your traditional down payment assistance programs or, community reinvestment programs, the vast majority of those programs have income caps. The fact that we've got access to down payment assistance programs with no income cap is such a huge thing. So I wanted to mention that because, I don't want to say they're nasty loans, but it's such a great option for people that they need to know that's out
Can I
there
just
because a lot of times they're getting told otherwise that
Yeah.
it doesn't.
Yeah. Yeah, to Dave's point, and so like those folks, these new folks that are coming up, these new first-time home buyers, they're making great money, but the programs haven't caught up to that. They haven't caught up to what people are making now and what the cost of homes are now. And so I'm 25 years old. I just, I got my first job making really good money. But when you talk to those folks and say, "Sorry, you make too much for this program," they're like, "Are you kidding me? Barely gonna be able to afford this payment, but I make too much. I don't have any down payment." And so it's for those folks that are helping bridge the gap between products and guidelines just haven't caught up to the world yet. And so it's awesome that those things are out there.
one thing I want to add here with bank statement loans, like those are pretty common now. I would say those are dogs coming in here. My thing is, bank statement loans are pretty popular. Like most retail have one option or two options, but what I have found is that we have so many options. And here's the deal: if you only have one bank statement option, there could be a cap on the down payment, and that ends the deal right there. Well, for me personally, I had a deal where we were capped on the loan to value or the down payment based off of the FICO score. Normally, it would be a done deal. Like, man, we tried, we almost had it. I turned around, I got 10 other lenders just like this one, 10 other investors just like that one. And one of them came back and said, let's go, let's do it. So it's still alive. So it's not just that when a retail lender or a broker says we have a bank statement loan, well, that can be broken down. Like there's a lot of variations of it. So when I say we have 140 whatever investing partners, I'm talking about over 1,000 products because it's not, because you have variations of these products. And I think that's the point here is, Dave, how many calls do you get? I mean, to be honest here, how many calls do you get a week or from a realtor or from a buyer who was so close to getting the deal done, but that person or that lender was just like, oh, your FICO wasn't good enough, or it was just you were at a 667 and we need you at a 680. And then you get those, we get those deals all the time, don't we? I think I have like 3 in the past probably month where just because of my options, I get the deal and it's done.
It happens often. Um, and I think it's a twofold situation, like you said, right? I think it's the knowledge and execution of where we can place that and do it very successfully, right? And drive the transaction from start to finish from the origination point of view. I think the other thing too that's very critical is margin on rate lock, right? Because the other very typical thing we see on a lot of those transactions is, on the retail side, let's say there's a little to no flexibility on the rate fee combination. But over here, let's say, in that same scenario, our rate and fee combination is 0.5% lower on the interest rate. And that's all it took to qualify the debt to income ratio. Like sometimes just very little things like that can save a transaction where somebody is not getting their pre-approval over here at this lender because they can't qualify them at that purchase price and payment combination, where we can just obviously reduce the rate fee combination with all of our options that are available. And that by itself saved the deal. So
It's a game of
it's
inches.
funny. I would say a lot of those scenarios, they're not necessarily overly complex situations. The vast majority of them are actually very simple and they're very simple fixes. It's just identifying that fix right now and communicating that right to all parties on the real estate side and saying, hey, here's your fix. This qualifies. Here's all we need to basically wrap this up for a clear to close. And then, The other thing I love about our world is, on average, these files are getting cleared to close within, 7 to 10 business days. Like
Crazy.
they're not lingering. Like once we identify that solution, like it's full steam ahead, and then all of a sudden everything's cleared to close. And it just kind of gives the buyer and everybody in the real estate side of the transaction, I think it just gives them more peace of mind to just jump in to the file right up front with that level of confidence and execution. And then boom, all of a sudden everything is clear to close. And it was a very seamless situation. So yes, we do get, complicated situations, but I would say the vast majority of them that I see are actually relatively quick, easy fixes.
Yeah, you brought up another point, and just to clarify, when a typical lender wants to get their clear to close, which means underwriter loves it, everything's good, we're ready to close, there are overlays. And those overlays can come from different places. They can come from the very top, the Fannie Freddie level in the secondary market, or they can come from the company itself. As a broker, you don't have that middle overlay. We don't need it. Let me give you an example. Let's say I own a bank and I know I'm going to sell that loan on the secondary market. So I follow their rules, but I have my own rules too. And these rules kind of suck. These are what kind of kill deals. I call those middle of the road deal killing overlays. We don't have those. And I think that's when you talk about a clear to close in 10 days, I think I'm averaging about 12 days right now. I'm not kidding. It's because if you know the guideline and you go right to the top, it's done. There's no middleman saying, well, but we have our internal overlays. That's probably the greatest, I think, surprise that I've seen in our industry for true rate. Well, that's it for the crew that keeps it true.
That was snazzy.
Awesome,
buddy.
man.
You're the man, bro.
Thank you, guys. We'll talk soon.
Thanks,
All
Tim.
right.
Talk to you.
Bye.